Yomi, thank you so much for joining us. And I think some people may begin to get worried when the Naira begins to weaken as it has over the last few sessions. But is there anything to worry about? Because many will argue that we're still within the central bank's target band.
Yes, Wole, how are you? Definitely, we're still within the central bank's target. And the depreciation we've seen in the market is mainly because there's sort of a short supply of USD in the market. You realize that we had an auction last week, and a lot of foreign investors that participated in the auctions did not win, so we did not see the kind of dollar flows that we usually see when we have these T-bill auctions. Also, the yields have gone down significantly on our fixed income space, and so the offshore investors are holding back a bit. We're not seeing the kind of flows we saw late last year and early this year into that market too. Right. So there's a shortage of dollar in the market, and this is primarily responsible for what we've seen on the exchange rate.
And your thoughts on the capacity of the central bank to come to the table? Now we're not seeing as much dollar flows into the FX, or rather fixed income market, as we did last year.
Yes, you would realize that even from the beginning of the year, the central bank has been selling not so much dollars as before, significantly much lower than what they did at about this time last year also. So they should have a lot in their armory to be able to meet this, what one would call maybe just a tick in the trend.
Right. Okay, those yields are lower, like you mentioned, in the fixed income market. But I think a key point to note is that foreign investors, even while they are taking profit on those positions, they're actually not taking the money out of the market. So it seems that they're still keeping faith with Nigeria at this time. Your thoughts about where that money is going as they take profits from some of those bonds that have rallied so far this year?
Yes, what is happening is that most of the offshore investors are switching portfolios. They're moving from fixed income, they're moving into treasury bills. We're not seeing them taking out so much of their money, so we're not seeing pressure from repatriation as it may be. What we're seeing is that the money remains in the system, but it's switching from one asset class to another.
Okay, and then I think another point to note, if we move back to the fixed income market, is that we're seeing a bit of an inverted curve at the short end. We're seeing the 91-day T-bill over 10%, but the 360-day T-bill now trading at about 9.8%. So your thoughts about how that dynamic is likely to change going forward?
Well, you see that the situation we have right now is primarily because we have a lot of demand at the longer end of the T-bill market, the 364-day. This is actually the prime choice of most offshore investors, and the prime choice of anybody switching from a fixed income from a 3 to 5 year bond into another instrument. You'll probably take a longer tenured instrument. So you have a lot of demand in that side of the market. So that's why you see that the yields are much lower than in the shorter end of the market.
But how do you see that changing, though? Do you think we'll see sub-10 yields for the 91-day T-bills in another few sessions?
Yeah, market will actually begin to correct itself. Usually, by the time it goes into the secondary market and it's trading, you usually see some correction taking place over time.
Okay, let's talk finally on the outlook for the Naira. Oil prices are looking good. Reserves are very strong at $47 billion. Your thoughts on where the Naira is likely to head? Many will argue that it will still stay within that band, but where do you see it going from here?
No, I would place myself with the people that argue that Naira would stay within a band of, say, 157, 159. I don't see too much depreciation going forward. Apart from the fact that the central bank is committed to maintaining stability in the exchange rate, we also should realize that by March, we will be listed in the Barclays Emerging Market Index. That usually generates a lot of flows from the offshores.
You think we'll still see flows? I mean, even at these yields?
Yeah, we will. We should, because comparatively, I think Nigerian yields are still by far the highest in any of those baskets. So if you are trying to outperform the basket, then you would like to the index. Then you would like to buy Nigerian yields.